Okay, so I'd like to call to order the Finance Committee meeting of March 22nd, 2021 at 5:01 PM. Can I have a roll call, please?
Yes, you can. That would be Counselor Cassett Sanchez,
Here.
Counselor Villarreal,
Present.
Counselor Lindell,
Here.
Counselor Romero Worth,
Here.
Counselor Beta.
Here. Okay, the next item on our agenda is approval of the agenda. Are there any changes from staff?
Yes, Mr. Chair, we are removing item C.
Okay, that would be item C off of the consent agenda. We are not going to hear that this evening.
That is correct.
Okay. Okay, any changes from the committee on the agenda? Can I have a motion to approve the agenda as amended?
Move to approve as amended.
Okay, we have a motion and a second. Can I have a roll call, please?
Counselor Cassett Sanchez,
Yes.
Counselor Villarreal,
Yes.
thank you. Counselor Lindell,
Yes.
Counselor Romero Worth,
Yes.
Counselor Beta.
Yes. Okay, so that brings us to approval of the consent agenda, items to be removed from the consent agenda. Counselor Lindell.
Thank you, Chair, and I just want to throw in before I do this, a happy birthday to Mary McCoy. I know it's her birthday today, and I wouldn't be so rude as to ask her how old she is, but I wish it to be a happy day.
Thank you, Counselor Lindell. Thank you.
The items that I have, I'd like to add as a co-sponsor to item N. And I don't think that item A is open to co-sponsors, but I am highly supportive of that. And I would like to actually pull for a moment of discussion, item P.
Okay, Councilwoman Romero Worth.
I would like to pull item A just for some comments.
Okay, Councilwoman Villarreal.
Thank you, Mr. Chair. Item A as well. Item B is in boy. Item D is in dog for a follow-up. And a quick question on item F is in Frank. And that's all I have.
Okay, Councilwoman Cassette Sanchez.
Already pulled. Thank you, Mr. Chair.
Okay, so I have items A, B, D, F, and P that have been removed from the consent agenda. Can I have a motion to approve the consent agenda as amended?
So moved.
Second.
Okay, can I have a roll call, please?
Counselor Cassett Sanchez,
Yes.
Counselor Villarreal,
Yes.
Counselor Lindell,
Yes.
Counselor Romero Worth,
Yes.
Counselor Beta.
Yes.
Thank you.
Okay, so that brings us to approval of the minutes, the meeting, the Finance Committee meeting of March 1st, 2021. Are there any changes from staff?
No changes, Mr. Chair.
Changes from the committee? Can I have a motion?
Move to approve.
Second.
Okay, can I have a roll call, please?
Counselor Cassett Sanchez,
Yes.
Counselor Villarreal,
Yes.
Counselor Lindell,
Yes.
Counselor Romero Worth,
Yes.
and Counselor Beta.
Yes.
Thank you.
Okay, so that brings us to item 6, presentation, an FY21 update. Ms. McCoy.
Thank you, Mr. Chair. Tonight, we will be doing an FY20 review and FY21 update for the committee. I'm just going to jump right in. We do have a participant that will be joining us this evening, Riley White. Dr. Riley White, he is someone who we have brought in to assist us with revenue forecasting as well. So he will be joining us tonight. And Bradley Flitch will also be joining us for our presentation. So I'll begin. We're going to do an FY20 review where we were last year at this time, an FY21 economic update by Dr. White, and a revenue update for the current fiscal year. Just wanted to go over in brief a few key points that we have here. Where we were a year ago in March and April, we're going to be reviewing that with you, where we faced an uncertain economic outlook, where we faced a steep and sudden onset of a recession, unprecedented unemployment levels, declines in our local economic sectors in a very short period of time that we had not seen previously. 1 year later, this is Dr. White's going to give us an update on our FY21 and FY22 economic outlook, some key drivers, and our improved forecast. Bradley will then review what that means for our FY21 revenues, and we look forward in the coming weeks as we roll out the FY22 budget to sharing with you what that means, what the improved economic outlook means for our FY22 budget. And we did want to have a caveat as well as we go through these slides that there are still some potential risks that we're not completely in the clear for our economic outlook. So that being said, I'll go ahead and start off. I'll just jump right in just to review where we were last year at this time. We were after the first quarter of 2020, we were in a deep national recession. This was really seen by a 4.8% decline in our US GDP. It's really unprecedented since the last recession. We also saw our real disposable personal income and real consumer spending drop by over 7%, close to 8% in the first quarter. So again, we were looking at a recession after the first quarter and an initial economic outlook that was pretty bleak for 20 and 21, given the sudden onset of a global pandemic and the impacts for us nationally and locally as well. As you will recall, we did review some local tourism data with you at the time last year around this time that showed that our local tourism industry was really hurting. The initial data that we had was from March, showed a 45% decrease in occupancy in our hotels and about close to 50% decrease in their revenue per available room. This then continued to decline through the month of April. From April 2019 to April 2015, we saw a decrease from 68% hotel occupancy to only 15% hotel occupancy. We were seeing similar data out of the Santa Fe airport that showed a drastic decline in our airport traffic to the tune of 98%. These are very drastic numbers. We normally see 21,000 or so passengers come through, and we only saw about 500 come through in the month of April. So these changes in our economy, again, very sudden, did have severe impacts on our local employment. The table to the right shows the top Santa Fe metro area employers. So with the stay-at-home orders at the state level last spring, some of our major employers had to close partially or fully. So given their uncertainty in the loss of their revenue, some of these major employers like Christus St. Vincent's or Santa Fe Community College, or some of the casinos and the hotels that employ Santa Fe residents, decided to either lay employees off, or furlough employees. So this did have an impact that rippled through our economy on lost taxable gross receipts for our businesses and lost wages for our Santa Fe residents. This is really evident from our local and state initial unemployment claims. Again, kind of the level of how unprecedented this was. When we look at the 2008 recession, the highest point for unemployment that occurred during that recession was close to 3,000 statewide. Here in Santa Fe, we quickly surpassed that. And within 4 weeks, we were close to a total of 8,500 initial unemployment claims during that first month of those stay-at-home orders. So what did this translate to for us? We tried to understand the unique nature of the risks of a pandemic, a global pandemic that had not happened within the last century, and the impacts to our economy, and how important it was to understand the different sectors of our economy and how it impacted the different sectors of our economy. It's important to note, and Bradley will go over this later on in the presentation, but from February 2020 to January of this year, as compared to the same period in the previous year, our local businesses lost close to $500 million, or 14% of their taxable gross receipts. It is a very, very short period of time to lose such a large amount in taxable gross receipts, which does reverberate through the economy, lost wages, lost GRT, lost revenue for the city. Again, this is something that was not unique to the city of Santa Fe. Last spring, city governments nationwide were also dealing with a high level of uncertainty and the lost tax revenue from stay-at-home orders in their communities as well, due to the spread of the virus. So we saw through early surveys of other local governments that also had unanticipated revenue shortfalls, and increased costs of spending to deal with the public health emergency. That both of those together led to reductions in public services and furloughs and layoffs for government employees nationwide. So fast forward a few months, and we did see the impacts of the federal stimulus, which really helped us not to fall off as deep of a cliff as we had anticipated a year ago. We saw the CARES Act come through from the feds, and actually the legislature issued a report this past December, and they cited that the $9.3 billion in federal stimulus that the state of New Mexico received during the pandemic was the lifeline that helped cushion the state and local governments from the massive drop off in tax revenue. This was extremely important lifeline to not just the state, but also the local governments. So the city allocation that we had last year in September, we received $17.5 million in CARES Act. We were able to get that out very quickly within 3 months. But in addition to that, we have to keep in mind the other aspects of the federal stimulus. And Dr. White will go into that in a few moments, the $1,200 stimulus checks, the additional unemployment money that helped our residents as well, the PPE loans, all of that. So with that, I will turn it over to Dr. Riley White. Dr. White, if you could introduce yourself to the committee, since this is the first time that you will be present, but not the last time that you will be presenting together with us.
Oh, thank you so much, Finance Director McCoy, and thank you so much to the members of the committee. It's a great honor to be here today, and it's my privilege to present the economic update going forward. My name is Dr. Riley White. You can call me Riley. In this capacity, working for Erebor LLC, and as a small consulting firm. But in my sort of background and expertise, before I was an academic, I was a banker. I have 15 years of experience in economic analysis, banking, budgeting, academic research, budget forecasting and modeling, and portfolio analysis, in addition to a bunch of other papers and other things if you're looking for good ways to fall asleep. But when I was brought into this, the challenge of this as a way to examine the economic perspective of Santa Fe was to produce some scientifically driven revenue models to show, what the forecast will show in the coming years based on what we know so far. And when we think about how revenue models work, that includes a bunch of other different things. Major economic drivers help us figure out what tax revenue streams will be. And it has, when we think about these things, models should be scientifically driven, they should be multifaceted, and they should have the ability to be flexible when more information is known. And so to give this kind of base perspective, one of the first things I want to do is kind of walk through kind of our analysis. Finance Director McCoy did a great job of explaining how we got to this point. And now let's talk about now as well as the immediate future with regards to some of these projections going forward. So first, I want to give you a national economic overview. And so one of the things that we like to do, we always love forecasting in economics and finance. Because the 1.9 trillion stimulus package passed, we expect 2021 GDP growth to be near or exceed 6%. My number is about 6%. This is a bit conservative. This is the highest GDP growth number. I know some of you might be familiar with older numbers of GDP growth, between 2 and 4% typically, powered by the stimulus. This is the highest number we've seen since 1983. Inflation expectations. You're reading a lot about in the news about these things. We expect inflation to peak around 3% this year, not a severe level, before dropping back to 2%. Powering this is continued recovery. Travel and leisure, consumer spending, we expect people to travel more. The Federal Reserve has indicated it will keep rates near 0%. Now, the Fed sets one rate, overnight lending to large banks, which we call the discount rate, which is currently set at very close to 0%. And this is expected to continue in the short run. And what this does is it encourages investment and encourages spending as opposed to savings and other things as well. One concern that many of us in economics and finance had leading into this was, were we going to have a double dip recession? 6 of the last 8 recessions were double dip recessions, which meant that we had a period of recovery followed by another period of recession that happened afterwards. Right now, economic consensus puts this around a 12% likelihood. There's no evidence that a recession is priced in to the bond market anywhere else. And it's currently, we're looking more towards a K-shaped recovery or recovery in certain sectors faster than other sectors in the coming few months. Persistent unemployment. This remains an area of concern for us as well. And unemployment, of course, is historically high. Even here in New Mexico, we currently have about the 4th highest unemployment rate in the country. Next slide, please. So I'm going to go over this quickly. It's a lot of numbers and a lot of graphs, but all I want you to focus on is the numbers with the green bars represent the first forecasting period. So everything after to the right of the green bars represent our expectations. And to kind of underline what's already been said, we had a historical loss of GDP in the second quarter of 2020, as well as real capital spending, consumer spending across the board, and unemployment. This was the worst quarter we've seen since the Great Depression, back when we actually didn't even have the current fiscal technology to track adequately certain conditions like unemployment. And we recovered quite substantially thanks to a series of stimulus initiatives by the US government. We recovered substantially in the third quarter. That recovery is expected to continue. And what's happened because of the stimulus package that was just passed is we've started to revise those numbers upwards. For instance, real GDP. We're going to have a very strong growth in quarter 1 and quarter 2 of this year, between 3 and 9% GDP growth. That's very substantial on a quarterly basis. All these numbers, by the way, are annualized, which is how we express them in a consistent way. So it doesn't mean that it dropped a third of the economy in one quarter, but it is an annualized number. And we expect this to continue as the economy pushes forward. Next slide, please. Now, if we consider the major macroeconomic indicators, one of the things that I want to focus on are the 2 left columns. These are forecasts going forward. One of the things that is of particular interest to us is, of course, as a revenue driver, we think about property taxes, we think about what drives it. Things like a GRT and lodgers tax are driven heavily by economic conditions. Things like property taxes are driven by population growth, as well as real estate market health. And right now we have an incredibly robust real estate market, but with regards to some of our beliefs and some of our forecasts, if we look at the 10-year bond, which is the far left portion, the 10-year bond is the rate at which the government gets on 10-year bonds, 10-year debt instruments. And this helps us predict things like 30-year mortgage rates. And so we have historically low mortgage rates, but we expect that that the bond rates will continue to rise, and likely financing expenses will continue to rise on those 30-year mortgages in the future, but not by a severe amount. In the second column from the left, you have CPI. That's a measure of inflation. It's a basket of goods where people go out and we determine how inflation progresses through time. We're expecting, because of the stimulus package, to see 2.8% inflation through the next 6 months. Annualized, that's higher than usual. It's about the highest we've seen since 06, 07. It's nothing to be alarmed about per se, but the other side of that is despite an extended fiscal stimulus, a lot of our fundamental economic numbers that help us predict when inflation happens, things like wage growth, things like other things, are still lagging, and they offer some uncertainty with regards to whether inflation will happen to begin with. So 2.8% represents a broad consensus estimate. And we expect unemployment to go down and that overnight lending to large banks to remain low. Next slide, please. Now, the big thing here, as we all know, is real estate appreciation has been significant. Over an extended period of time, like 30 years, we would expect real estate to increase about 4 to 5% on average per year. Since the last year, across the country, it was a 10% increase. This is unsustainable in the long run, and it's the highest level that we've seen since 2006, 2004 to 2006, where real estate increased at a 12 to 14% rate. The side note on those numbers is that it's nothing to be concerned about per se. Back in 05, 06, we had a different system. I was working as a banker at that time, and banks were grossly undercapitalized. We had a lot of uncertainty regarding the risk of certain securities. Banks are more capitalized now. Rates are very low. And so if you look at this in context of the entire world and asset prices there, we actually think the real estate market in the United States does not look so bad. There's nothing to say it will crash tomorrow or anything like that. We expect that as rates remain low, people will continue to power and buy real estate. Next slide, please. And so in this one, we can actually see how historically low this has been. And one of the factors that have been driving up property values has been incredibly low fixed mortgage rates, the lowest actually in the history of recording mortgage rates, all the way back to the early 1970s. And these rates are expected to come up a little bit, but not enough to dampen the overall strength of the real estate sector. Next slide, please. Now, one of the things that's very important here in Santa Fe, and I am a resident of Santa Fe as well, we think about travel numbers. We think about the 2 million potential overnight visitors that might visit Santa Fe in an individual year, and how, and actually this turns out to be a very useful statistic when we look at travel numbers, when we compare things like hotel stays and other things that are very useful to help predict things like lodger's tax. But TSA checkpoint travel numbers provide a glimpse of how many people are actually traveling. And I want to point out, and you can kind of see it's a lot of up and downs because these aren't smooth. But in 2019, you get a sense of, we have between 2 and 2.5 million people at any given day going out and traveling across the country. And then in 2021, which is, of course, in 2020, we saw that massive drop off in March as we closed, the loss of the travel industry. And we saw kind of a steady state scenario that existed from July through December. There wasn't a lot of increase in traveling. It kind of bottomed out about a quarter to a third of what travel numbers have historically been. Now, beginning in 2021, we have some cause for good news. We've seen in January and February, those travel numbers, which bottomed out at about a quarter to a third of what they should be, increased by the time March came around to about half of where they should be for that time of year. That's a substantial increase considering many places in the country are still under lockdown. If I were to carry those numbers forward directly, by late June, they would be back to normal. But what I did was I modeled this on a conservative basis. I modeled and examined, let's look at the states that are opening up, not opening up. Look at the number of travelers that exist across the country and in people's willingness to travel. And it's a slower upkeep, but we're looking at about 70 to 80% of travel capacity in a very conservative estimate happening by mid to late summer. And that bodes well for economic fiscal recovery. Next slide, please. Now, the $1.9 trillion stimulus, I can't reiterate enough the positive effects this will have. In addition to creating GDP growth that will be the highest we've seen since 1983, and anticipate we can add about 3 million jobs and we can boost savings and spending rates. When the stimulus checks were given, they helped significantly reduce poverty and also improve savings rates across many Americans. In fall, our 2020 savings numbers were about 14%. That's about of income. And that's about double where historically people have saved in the past. Inflation above 2% is likely, but we don't expect it to be significant, and it will likely fall back down to 2%. And I want to reiterate that the $350 billion of state and local outlays will be able to boost core services and maintain employment levels for municipal employees nationwide. Those outlays are key, and they are important part of this. And in addition, those individual stimulus checks mentioned at a $1,400 per check person, if you examine a city like Santa Fe, a city with around 85,000 people with, say, 38,000, 39,000 households. The average household size here is about 2.2. About 90% of Santa Feans by income qualify for these stimulus checks, which results in roughly $100 million of direct stimulus action towards citizens of Santa Fe. And likewise, because of those things, consumer spending and retail sales will likely exceed initial expectations that were even made 2 months ago. So next slide, please. And now it's going down to New Mexico. Of course, we have high economic growth is expected to continue. But again, we have persistently high unemployment here. New Mexico's most recent unemployment number, about 8.7%, is the 4th highest in the country. Depressed employment in oil and gas, about 32% below where it should be. Leisure and hospitality, about 30% below where it should be. Here in Santa Fe, that's exacerbated more so. It's about 40% below where it was before the financial crisis, before the recent pandemic crisis, I should say. In government and financial activity, hiring is still lagging. But on the side note, there are some cause to hope. Robust residential real estate sectors growth is expected to continue. Inventories for houses are expected to improve, but not to a level where they'll start depressing prices on the market. And the oil and gas sector should recover slowly. And this is hard, of course, but we expect oil prices to remain, right now, they're in the $60s in dollars per barrel. We expect them to remain relatively steady over the next few years, barring an international crisis. It is a commodity. It is traded worldwide, and consequently, a lot of things can happen. But right now, $60 seems fair based on the metrics of the oil market. Next slide, please. Now, in New Mexico, one thing to remember, of course, when we look at New Mexico economic data, is that New Mexico has a historically, recessions don't hit us as bad as it does in other places, and but our recovery is more long lasting. So even though we don't achieve those really, really high unemployments that we see in other states during the middle of a crisis, it takes us longer to build back those jobs, longer to build back that economy. In Santa Fe, we have a bit of a healthier fiscal situation. Historically, if we go back since 2011, there's a little bit of cyclicality here. That's seasonality and unemployment. Unemployment is actually historically slightly higher in summer than it is in winter. And in Santa Fe in general, recovers favorably when compared to New Mexico as a whole. But many of the same metrics continue. And so we expect that Santa Fe's employment will eventually drop down and continue below New Mexico state averages. Next slide, please. And for the Santa Fe economic growth, and so a few things I want to point out quickly on this is we expect, of course, gradual improvements in hotel occupancy and restaurant spending. Santa Fe real estate growth in prices exceeded U.S. growth rates. And I want to reiterate something that was very robust despite the pandemic was construction. Construction activity has been strong. And current construction employment in the county has actually reached pre-pandemic levels. Spending will likely increase substantially in fiscal year 2021, which will benefit retail establishments, looking at electronics, home furnishings, luxury stores. We'll see benefits from this category. Public sector employment remains somewhat below last year. There's about 1,400 jobs that are not currently on the fewer jobs in public sector than we had a year ago. But stronger fiscal positioning will allow greater hiring in this sector, and this goes across a number of government agencies. Next slide, please. Now, the construction boom, again, to reiterate this, if we look at private housing units authorized by building permits in Santa Fe, you wouldn't guess that 2020 to 2021 was a pandemic by looking at this chart alone. And I think that's telling. Construction in Santa Fe has been robust. Real estate demand has been robust. And this is favorable to continued economic growth and population growth. And that helps us predict and work into how property taxes will behave and other things as well. Next slide, please. So wining and dining, seated diners across Santa Fe is really hard to gauge to find a centralized database. But Open Table is they provide a database that allows you to see the number of diners who have been seated. Although our restriction levels have been different than the rest of the country, the number of of extant diners have recovered to about half of what they were right before the pandemic at this time of year. The United States as a whole is about a little above 60% in the restaurant sector. We expect these numbers to continue, projecting them forward. Hopefully continued progress with the vaccine and continued openings will continue to happen. Next slide, please. Now, the hotel industry in Santa Fe is, of course, a large economic driver. And one of the things is using STR data, I was able to project ahead systematically and try to figure out where will the hotel industry be this summer. And it's wide, there's a series of wide bounds, and the wide bounds are driven by the ability of the population to recover from the pandemic, vaccinations, openings. Are we going to reach turquoise level? We're going to proceed in positive directions. And so the upper bound actually exceeds the 2019 levels, but and the lower bound is low, but it's still better than where it was in 2020. And this represents a 95% confidence interval. Now in the middle, that represents the best guess, and we expect in summer roughly following the TSA travel estimations that will at least get hopefully between 70 and 80% of occupancy compared to where it was back in 2019, or 70 to 80% of that number. I'm sorry. So that is an objective. Next slide. Now, real estate dynamics in Santa Fe. You've seen a lot of numbers about this from a lot of different sources. This uses the Zillow Home Value Index, which is useful because it doesn't just look at houses that might have just sold or been for sale, but sort of an aggregate estimate of property value. And while it's not fully accurate, it represents a fairly good picture. Santa Fe, despite being more expensive than New Mexico as a whole, has had robust growth in this sector, and that's going to help power those property taxes in a looser way. But it also helps dictate the manner by which people consume. And that consumption will tie back into other parts of the economy as well. Next slide, please. So if I were kind of drilling down to a final slide that kind of reiterated these things. So right now, the Santa Fe economy looks strong for a continued recovery. We're looking at things like GRT and lodgers tax that'll be bolstered by recovering economic conditions, increased travel. There's a lot that's been said about pent-up demand. The markets probably have already forecasted that. It's already priced into the markets as a whole, but we expect that economic data to follow suit. And I think that historically high savings rates will help power a lot of discretionary spending in the next year. Now, a robust property market means low interest rates and growing population. This usually means good news for property taxes. And although there's moderate inflation due to economic overheating, and overheating is a broad term, overheating is more probable than another recession at this point. Worst case scenario, and this is something we all have to consider when we do any type of economic or financial modeling, an appreciably more dangerous virus variant could happen, forcing additional closures, in which case the most vulnerable revenue streams for the city are in GRT and lodgers tax. On the opposite end, higher than expected inflation, I know there'll be concerns always about that, usually increases both revenues and expenditures for municipalities, and it offers a really complex risk. So it's not something that I had to go through. I was explaining to look at this stuff. It's been so long since we've seen anything really historically above 2.5% in inflation. I had to blow off the dust on old economic papers to get some perspective on how to actually look at this. But that's kind of our overall perspective. And I appreciate the time that you've spent allowing me to explain it with you. And I'm here later to answer any questions as well.
Thank you, Dr. White. The next section is our FY21 revenue update. So I'll turn it over to Brad.
Thank you, Mary, Chairman. So, I mean, one of the first things we got is gross receipts tax is the largest single source of revenue for the city of Santa Fe, and a major contributor to the tune of 67% of the general fund. GRT makes up roughly 30% of the total revenues to the city. Close behind that would be utility revenues. And, those are all, enterprise funds staying with utilities. One of the problems with our forecasting is that New Mexico GRT is with a 2-month lag. So we just got January Friday. And so here we are in mid to end of March, and we're just now getting January data. So even after the fiscal year is over for 2 months, we'll just be getting June 30th data. So kind of the things. As you can see, this chart here, we're showing by industry group. This is tracked by the Taxation and Revenue Department, and it's by NASIC code. You can see who's the big, retail trade is a big part of our economy. And again, this is taxable gross receipts, not total gross receipts. Next slide, please. So this is gross receipts. This is by, total gross receipts, total taxable gross receipts collected by Santa Fe businesses. And you can see in January 2019 at the very far left of the chart, that was our last month of positive year-over-year growth, was in 2020. And every month after that, we've had a decline. But you can see also one of the important things is, and this plays part into our forecasting, is the seasonal aspects of GRT. And we'll see that here later in lodger's tax too. But in that seasonal part, we receive roughly 60% of GRT in the first 6 months of the year, and 40%, well, I guess it's like 53% in the first 6 months, 47% in the last 6 months. Next slide, please. And you can see this is the distributions. And again, the last month with actual growth was January 2020, with up 100,000. But every month after that has been a decline. Year to date, this is important. Year to date, we've received roughly 59% of total GRT of the 90.7 million budget. Right now, we're ahead of budget, but we're way behind FY19. Next slide, please.
I think what's important to point out here is that our revised GRT revenue estimates for the current fiscal year for FY21 are likely to reach 97 million. So this is about 6 million over what we had originally projected in July. This is great news. This really leads off of the economic analysis that Dr. White provided to us to be able to understand where we are at right now with our red, green, yellow, what that means for our local businesses, what that means for our local economy, and what we can expect going forward through April, May, and June of this fiscal year. So a very, very different position than we were in last year at this time. That being said, tonight on the Finance Committee agenda, you will have in front of you a few items that are budget adjustments. And we made this commitment to the council when we originally put forward our FY21 budget in July. We said that we will continue to monitor these patterns as the fiscal year continues. And as soon as we did have any good news, we were hoping for good news at that time where our revenue estimates would outpace what we had projected, we would come back to this body for additional budget adjustments, for adding back in budgeted expenditures for this current fiscal year. So there's two items on tonight's agenda that fit the nature of those budget adjustments to be able to be supported by this additional GRT revenue. In addition, over the next few months, we will continue to bring you updates about our revenue for FY21 and about the corresponding budget adjustments that you can expect. So we can start to bring back services or bring back employment throughout our city structure.
Thank you, Mary. The one important thing there, it also changes the base from where we're estimating FY22. And so, if we were budgeting from 90 million and then budgeting FY22, that's one rate. But now we're saying the base has changed. It's not 90 million anymore, it's 97 million. And then we have a growth rate above that. And so it's really, it's not only good for FY21, it's also really good for FY22. Property tax, given the problems we had in property tax and budgeting, the finance department did a deep dive and really looked into property tax and how it works, and the state and yield control. And it's a very complicated and interesting thing, but we budgeted 11.9 million last year, and we found that to be probably structurally overestimated. We're going to come in right at 10.9 million this year. So this is going to fall short of budget by about $1 million. And lodgers tax, one of the things I want to tie to is tie it to Dr. White's TSA travel and the seasonal patterns. This is by month. As you can see that the city's big months in lodgers tax receipts, July, August, September, October, stretching barely into November maybe. And then it substantially drops off through the winter, and it's just on the uptick when we come back in May, June. And so this really ties in with Dr. White's TSA and the expectations we have. When you look at his numbers, he was looking at 70% of where we're at. And when you look at FY22, the budget there, unfortunately, we're only going to be at 70%, given Dr. White's analysis, in the 4 best months we have, July, August, September, October. But nevertheless, it's still much better than where the dark blue line down there at 400,000 is at. So I'm not saying we're going to be up, but we will be better than where we're at. So maybe 800, the 800,000. Next slide, please.
Thank you, Brad. So this is a highlight. We're going to continue to provide you with FY21 revised revenue estimates. As I indicated, over the series of the next few months, we're also going to be bringing forward a series of budget adjustments. So we can, as you all know, July 1st is a very artificial timeline for the beginning of a fiscal year. It doesn't really match up with our summer season, with our spring season, where we need to get ahead of on hiring, or our summer season when we have festivals in town, or when we have summer activity, summer youth programs and such not. So again, we're really looking at the opportunity to match the great news of these revised revenue estimates with additional expenditures to be able to support the services that the city is providing. So again, just a quick recap. A year ago, we were in a very different, uncertain economic outlook. Thanks to Dr. White and his guidance for our FY21 and our FY22 forecast, we are able to see improved economic drivers, consumer savings, federal stimulus, growth in construction, real estate sectors here, growth in travel and tourism, which impacts accommodations and food service and our retail. So what does that mean for us? That really means our city FY21 revenues, as Brad reviewed, are expected to show continued improvement. So that's the good news. So between now and the end of the year, we do expect to budget some of that unanticipated revenue so we can get that out the door with additional services. What does that mean for FY22? That means, as Brad alluded to, our FY22 revenue forecast is also an improvement over our FY21 budget in things that were impacted by the pandemic, like GRT and lodgers tax. So we will be bringing forward in the month of April through our budget hearings a package to support additional hiring into critical vacant unfunded positions, support spending throughout all of our departments, and to support our local economy here. Again, as Dr. White also mentioned, we still face some potential risks. A more dangerous variant of the virus could potentially cause closures or additional restrictions and a backslide from the green level where we see ourselves now. So that is the end of the presentation, and we do stand for questions now, Mr. Chair.
Okay, questions from the committee. Councilwoman Lindell. And you're on mute.
Thank you, Chair. Dr. White, thank you for being here. Appreciate it very much. So let me see if I have some proper takeaways from this that, with all that you talked about with us, and I think this is asking you, Dr. White, it sounds like we are at the front end of what looks like a pretty robust recovery. Am I getting the right takeaway from this?
That's correct, Councilwoman Lindell. I want to reiterate, and that's the interesting part about this, is that when we compare this to past recoveries throughout history, our foot has been on the gas with economic policy. That's contributed this, the additional stimulus at the congressional level. We haven't had sort of a perfect storm of this many positive things to boost us out of economic recovery in any recent memories since going back to the 30s and the efforts made in the 1930s to improve employment situations. So in most cases, this is a historic concerted effort at boosting the economic growth prospects in the next year. And that's why the economic projections are this way. And even at 6% GDP growth, it still trails some expectations, which some economists have argued for 8% or even higher. And I think that 6% is still relatively conservative this year.
Good. I'm just trying to hit some high points with this. So we've had we are in what is a rather robust recovery. Certainly the Fed monies that we've received have been helpful. We've got them distributed, in my mind, properly, which was a massive amount of work to get that done. And Mr. Flitch, I believe that the takeaway that I got from you is that our GRT is actually, or Mary, it's actually increasing quicker than we thought it was going to.
Mr.
Yes.
Chair, Councilor Lindell, yes, that is correct. We originally put forward a budget as a plan, a revenue estimate as a plan. And as soon as we saw some early indicators that our GRT would be increasing faster than we had anticipated, especially with the fact that we are opening up at a much quicker rate, we did come to the committee with that information, and we are proposing additional spending in the current year as a result.
Well,
Councilor Lindell, if I could, or Chairman,
sure.
if I could, I want to compare 2008 to 2020. It took 2 years to fall 13% GRT year over year. And it took 7 years to recover. In this case, it took 3 months to fall 15%. And we've recovered, upwards of like 80%, 70% in 9 months. So, I mean, this is just unprecedented, not to overuse that word, but crazy times.
Well, I want to thank all of you for bringing this information to us. I think it gives us a lot of reason to be optimistic about our future. We've been through a mighty rough time, and this gives us data to feel optimistic about the direction that we're headed, how we have handled our finances, and that we're on a good path with this. We can sit around and pat each other on the back and say, oh, we're on a great path with this. We've done great. This, my friends, is real data that shows that we're going in the right direction here, and we're going in the right direction at a speed we've never gone before. It is amazing how quickly this is happening. So I very much appreciate you bringing this to us in a form that we can see what's happening. It's something we can embrace, and we have real true data to make us feel good about the direction that we're going in. So thanks to everyone on the staff that touched this report. It's very, very meaningful. Thank you, Chair.
Okay, Councilwoman Cassette Sanchez.
Thank you very much, Mr. Chair, and thank you everyone for the presentation. As Councilwoman Lindell said, it's a lot of very optimistic news, so very happy to see that. I was hoping to dig in a little bit more to a data point that I find not very intuitive, which is looking at the increase in the real estate market and how that is a positive sign for economic growth. And the reason that I have a challenge with this is because what we hear from so many people is that housing prices are out of control, which means they're spending more on housing, which means they have less disposable income to go spend out in the community to bring us GRT. And, you know, that's where I'm really having a hard time really understanding this data point as a positive for economic growth. And I know it's not the only source of GRTs, local individuals, but, and I know that when people buy houses, they frequently buy things, but I also hear a lot of, we're trying to buy a house, the housing market is insane, we're really having to tighten our belts and not go out and spend any extraneous dollars. So can I get just a bit more information on how that factors into our projections?
Yes, thank you so much, Councilor Cassette Sanchez. One of the interesting things, the housing market is always a fascinating thing. When prices in Santa Fe are absolutely expensive, and it is absolutely hard, and the way that works out is often on an inequality basis. It is hard for people to afford housing here, and I don't doubt any of those things, and I think that's very important. When we think about economic growth, or at least how housing markets can apply here, and I'm being sort of separating myself from the question of, is it good to have high housing prices or bad? But saying that when prices are increasing, people who are already homeowners see increases in equity. And increases in equity financing allow them to, say, refinance at lower rates. That extra money will go to people for restoration of the house, other things as well. It's arguably, although it comes with negatives. It comes with a lack of a general population to be able to afford this sort of thing. Now, on the other end of the equation, if we had declining real estate prices, that would also present itself a very severe situation. You would have people who have mortgages that are greater than the value of the home is worth. And then you would have no incentive to keep up housing. You have no incentive, all of these things. There's like this, as economic papers this high that shows how neighborhoods and places can be blown out when we have prices that are declining. And so while prices are increasing has itself a slew of negative social consequences, it would be worse in aggregate if prices were declining when we think about taking a pulse of how good the economy is doing in Santa Fe as a whole. And so what we've seen across the country, to give you context in it as well, asset prices have been increasing across the country. A lot of people are looking for yield, looking for returns because interest rates are so low. It's hit vacation areas, we would say, higher than other places. And so the biggest rates of increase that we've seen have been across ski resorts, towns that offer a lot of tourists and other places, second homes, things like this. And ultimately, what dictates that future policy side is the question of supply and demand in housing units and other things, and getting enough people into them. But that's sort of a broad 2-cent review of why why this perspective might, well, it's not ideal for people looking for a house. Of course, it's better than it perhaps would be if we saw declining real estate prices and in terms of aggregate property values, growth, and revenue projections.
Mr. Chair, if I may, one of the ways that from the city's perspective, a strong housing price reflects demand and future population growth. And with future population growth, with GRT being our single largest revenue source, a larger population spending more money in town is good for the city. It also improves lodgers tax, more people here visiting. It also improves property tax. And so a strong housing market, not too strong, it's like we want the three bears. I can't think of her name, but we want it just right. You know, not too hot. Goldilocks, thank you. We want a Goldilocks housing market. Not too hot, not too cold, but it reflects a strength, a demand, a desire to be here in Santa Fe.
Wonderful. Thank you both just for diving into that a little bit more. It's interesting because we spend so much of our time talking about affordable housing and the positivity of having more affordable housing that then, you know, it's a very different lens to put on it. So I greatly appreciate you diving into that more. That was my only question. Thank you again so much for your presentation.
Okay, other questions from the committee? We have members of the governing body who are not part of the finance committee. Do you have any questions? Councilor Garcia, did you have any questions?
I do, Mr. Chair. Thank you so much.
Okay.
And I guess my question maybe is for Mary. Given that, you know, we had our projections of GRT production given to us monthly, and I think it was pretty evident by fall time, November, that we were on a road to recovery. And a strong recovery at that, because I remember talking about this in December. And the election had just been had, and we knew that President Biden, or then President-elect Biden, was going to be soon passing some type of what became now the rescue plan. And my question is there a specific number of months we had to wait before we considered this a road to recovery? Or I mean, because if you're looking basically even prior to July, we never went over more than $2 million GRT loss. We had that big loss in July, but then August through January there was nothing that even touched that. I mean, the closest was 1.7 in September. And so my question is there a number of months we had to have waited to now claim that we're on this road to success? Because as I mentioned, it seemed pretty evident in the fall.
Mr. Chair, Councilor Garcia, this has been a very dynamic situation. As you referenced the fall period, that it was very evident we are on the road to recovery. If you do recall, in the month of November, we did face another 2-week period, which was seen on some of our charts and our graphs earlier in the presentation, where the wining and dining chart that we saw earlier, where the not just the hotel industry, but also our local restaurants faced a 2-week period of closure. Some of our retail shops were again closed for 2 weeks. So that's the type of dynamic, unprecedented, uncertain situation that we found ourselves in throughout the fall. And again, I think that was very evident with the red, green, yellow system that that was in place by the state. You know, we were in red for a series of several months. And then very quickly, when we did have an increase in the vaccination rates and we did have a decrease in the transmission rates, we jumped into the yellow zone and then very quickly into the green zone, which has enabled us to be able to make these revisions and have the level of comfort, despite the fact that lodgers tax in our tourism industry has not quite recovered at the same pace, or despite the fact that the property tax estimates are going to be about $1 million under what we had originally projected, to go ahead and start adding back expenditures at this point in the fiscal year. So again, I just want to continuously impress upon all of us that we're cautiously optimistic at this point, that we have seen those indicators that Dr. White reviewed with us as positive news going forward, but that this is a very dynamic situation. We're still, at a point where, as you all know, we have 70 different funds throughout the city that we have to balance. So the revenue coming into each of these funds has to be able to match the expenditure level going out. And so it is a very complex situation. So to be able to bring forward a package to the governing body where we felt confident that we would be able to see additional expenditures really did happen, in recent months. And then the time that it takes to be able to put together that package as well in a very diligent, planned out way. One of the budget adjustments that's before the committee members tonight is for our parks department. Again, July 1st is a very artificial timeline when it comes to our seasonality with our park system. We want to be able to start to make those investments in weed control in our park systems earlier than July 1st. We really want to be able to start to address those additional services that we need now. So again, as the situation has changed, we have continuously committed to bringing the updates and then to eventually bringing these budget adjustments, which is, again, we're cautiously optimistic about. At the time as well in the fall, if you want to recall, we, as you alluded to, we had the promise of the American Rescue Plan. We had the promise of additional vaccinations, but we actually did not have the vaccinations approved, the vaccines approved by the feds until, was it December, if I recall correctly? And then the American Rescue Plan, President Biden's package just recently passed. So we were anticipating these improvements, but we really didn't want to be able to plan on something concrete until we had these changes more concretely outlined.
Mr. Chair, if I may, and we didn't get November's data until January. We didn't get October's data until December. So we didn't even get to see the fall actual hard data for 2-month lag. And that's not the fine, that's TRD and just the process of getting us our distribution. So that can't be overemphasized. Thank you, Chairman.
Okay, Councilor Garcia.
Thank you, Mr. Chair. No, I think I had my question answered.
Okay, great. Councilwoman Vihil Coppler, did you have any questions?
Thank you, Mr. Chair. I don't have any questions. I want to thank the finance staff and Dr. White for the presentation. And I was very enlightened by your comments on housing. I just found that to be very interesting, and it seems to track what we, with the Santa Fe Association of Realtors and the New Mexico Association of Realtors and the National Association of Realtors track. So I think you were spot on. Thank you. Thank you, Mr. Chair.
Okay, Mayor, any last words before we move on?
Just appreciation for the presentation. I think it was really well done. It highlights both where we've been and the depths of the unknowns that we faced just 1 year ago, and the confluence of sound fiscal practices with good financial support from the federal government. The fact that there has been the stimulus packages, and now the ARP is a huge deal for our country, and support from the state as well. So this is the word unprecedented has been used a lot. It is not inaccurate. So Dr. White, thank you. And once again, Mary, happy birthday.
Thank you, Mr. Mayor.
Okay.
Chair,
Yes.
could we request that a copy of the presentation be emailed to us?
Yes, if you can do that, Ms. McCoy, that would be great.
Thank you.
And also make sure it's posted on the city's website. I think it's really very educational for everybody in our community to see what the data look like. Thank you.
Okay, so that brings us to items that were pulled off the consent calendar. The first is item A, which is a request for approval of a budget amendment resolution in the amount of $1.8 million for FY21 to fund current year allocations from the Affordable Housing Trust Fund to the recommended floor of $3 million per year. Councilwoman Romero Worth.
Thank you, Mr. Chair. I just wanted to pull this to add some additional information. I think this is a very exciting development. This recommendation for a budget adjustment from staff and our management team and the the mayor and his administration. Because together with this $1.8 million and the changes that we made to the fee in lieu of ordinance that raised this year a little over in the range of 1.3 million, the combination will allow the Affordable Housing Trust Fund in this fiscal year to reach $3 million. And in the attached memo, it talks about that being a floor. And I think this is just an important moment to note, because it's been recommended that we try to get the Affordable Housing Trust Fund up to $3 million at a consistent, sustainable, reliable level, now and into the future. And so this is a really big deal for providing the spectrum of housing that we need in this city, in this moment. And I think it demonstrates our commitment to working on this. And a little later tonight, I do have a resolution that I'll introduce for the mayor that I'm sponsoring, in addition to some other counselors, to talk about a work plan for looking for the long-term funding that we're going to need to keep this fund at the $3 million floor going forward. And that work plan will use our committee structure and the recommendations that have come forward to us through staff, through counselors, and through the many advocates in our community who work on this issue. And so I'm excited because I think this demonstrates our seriousness and the commitment we have to meeting this objective of fully funding the Affordable Housing Trust Fund and getting a reliable, sustainable amount of money in this fund. And, I think it was mentioned earlier this afternoon that this fund has historically seen something around the $100,000 level of funding, a couple $100,000. And I think that fluctuated year to year. It was hard to plan year to year to count how much money would you have, how much money could you count on to leverage it. We also heard that the leveraging on this fund is 3 to 1. So this $3 million represents a $9 million ability to do good work in the affordable housing area on a spectrum of the housing needs that we have. So I just wanted to pull this to make a point, and I would move its approval, but I'm sure there are other people who may want to speak.
Yes, Councilwoman Villarreal.
Thank you, Mr. Chair. This is definitely exciting amount of funding, the infusion of funding that we've needed for a long time. I just had a couple of questions logistically about the allocation and how it will work. And actually, these questions may be more appropriate for Alexandra Ladd to answer. As you all know, we just, the Community Development Commission, along with the Affordable Housing staff, we recently have recommended the 1.2 million that was through our community engagement process that would go towards local organizations. And as usual, we never have enough funding to be able to support the nonprofits and partners that are doing the groundwork for all of this. So we didn't have enough funding this year to be able to fully fund some of the requests. And so I guess my question is, this additional infusion, Alexandra, would this then go back to the CDC so that we could, as a group, make those adjustments to the initial recommendations?
Mr. Chair, Councilor Villarreal, I think we would have to make a decision about how we wanted to do that, because we would, I believe the ordinance requires us to do an RFP, but I think we could certainly have some sort of policy setting conversation about whether doing another RFP is the way to go, or whether we want to see which projects may emerge in the next couple of months that are similar to the Santa Fe Suites model, and whether we wanted to put some equity into a project such as another Santa Fe Suites.
Is that what we're anticipating?
That's what we're hoping, hopefully anticipating, hopefully.
Okay. That sounds good. Well, I mean, if that's the case, then that's a whole nother kind of project. I'm just making sure that if we have additional funding, that if we have an ability to go back to make adjustments to those initial recommendations, because there was quite a bit of a but we were limited as to what we were able to fund. And I just want to see if there's a possibility to increase those amounts. But you're saying that it would require a whole nother RFP process?
I believe, Councilor Villarreal, I believe so. I have to look at the ordinance again. You know, this is the first time, so I think we get to invent the wheel the way we need to roll the car. So, you know, I think we have some flexibility there.
Okay, that's good to know. And then this additional amount of funding, would it go towards this current fiscal year? Does it need to be spent down by a certain time period? Or can it carry over into fiscal year 2022? That may be staff. I don't know if that's finance staff.
Mr. Chair, Councilor Villarreal, I'll defer to Mary.
Mr. Chair, Councilor Villarreal, it's a great question. This appropriation goes from the general fund, from the additional GRT revenues into the Affordable Housing Trust Fund. So it is eligible for expenditure in the current fiscal year. If there is something that prohibits the expenditure before June 30th, it will then be part of the Affordable Housing Trust Fund and available for allocation or expenditure into future years. And
so,
Mr. Chair, Councilor Alex, I'm not sure if you want to speak to the timing. We understand by the time if this is approved at council, we're looking at a 3-month period, the April to June period for expenditure. So I'm not sure if Alex wanted to touch on the timeline.
Mr. Chair, Councilor Villarreal, yes, which is another reason that a one-time big investment in another property would be expeditious at this point in time. But, you know, I think that is a policy decision of certainly the Community Development Commission should begin the conversation about how to decide what the priority for the extra funds is.
And then the other question for finance is, can we use this funding to increase the needed staff we have, the needed staff we need in the Affordable Housing Office? Part of the reason why I think if we had a large infusion of funding, we also need to increase staff capacity. And they do great with the team they have now. It's just that there's a lot of bureaucracy with funding sources, not necessarily with the Affordable Housing Trust Fund. It's a lot more flexible. So I'm just curious if we could actually use this funding for increased staff needs.
Mr. Chair, Councilor Villarreal, yes, that is possible in the current fiscal year. That would lower the amount that we would allocate to any project or projects that would be funded through this allocation. That being said, we are planning, if I can just give a highlight of the FY22 budget, with the permission of the mayor, we are going to be bringing forward a package for an additional staff person. We have worked with Alex Ladd and understand Director Ladd's commitment and her staff's commitment, but that also any additional allocation of this nature, of this magnitude, would require additional staff to support the allocation process. So we look forward to presenting that to you in April.
Great. That's great news, because I think that will really help the team and just the ability to think beyond just what we currently do, just to be able to be innovative and think, to be able to have the space to not just do push papers, as probably Alexandra knows what I'm talking about. The other thing I wanted to mention with the memo, it was very helpful and thorough. I think the one thing I would add is that, for one, just to make it clear that the affordable housing staff is part of the allocation process of the 1.2, but it's also the Community Development Commission, and that should be noted in the memo at the beginning. And then also just to expand what has increased or supported our efforts in housing is that the priorities that were made on the Community Development Commission, how we allocated CDBG funds and affordable housing trust funds, and really prioritizing rental assistance, rehabilitation of existing homes, the support for homelessness, and also down payment assistance for working class families. I think those pieces were another important piece to highlight, other than all the other things that were listed. So just a note, there is a piece to that body that does support what we've done to support affordable housing. And the other thing I wanted to ask Alex is, we listed the change in our fee in lieu of, and I think I'd asked this before in another meeting. I was trying to understand, what was it, the change of the of that particular ordinance, or was it actually just the explosion of construction, and that it was actually increasing and that increased our fee in lieu of? So I guess I'm just asking, was it the changes we made to the fee in lieu of ordinance, or was it just the fact that we had a lot of exponential growth and construction happening?
Chair Beta, Councilor Villarreal, it is my belief that the changing the ordinance to allow the fee in lieu of is what created the revenue stream that we have now, which of course, to all the points that have been made, is not reliable because it relies on development activity and we can't predict necessarily how that's going to go.
Okay, thanks for the clarity. That's all I have. Thank you.
Okay, other members from the Finance Committee. Councilwoman Cassette.
Thank you, Mr.
Councilwoman
Chair.
Cassette Sanchez, yeah.
Thank you, Mr. Chair. I got the beginning of it, so knew it was me. But I just, similar to what Councilwoman Romero-Worth mentioned about how important it is that we put these dollars in there while we take the time to really look at smart, well thought out policy for how we continually fund this. My question is, my understanding as I'm reading this is for the current fiscal year, so FY21. And as long as we are talking about previews of the FY22 budget, if I may, I think that one of the pieces I've heard really loud and clear talking with people about the Affordable Housing Trust Fund is the need for consistency. And we've already talked about this, the need to know that there's going to be dollars in there so that it aligns with some of the other funding cycles that affordable housing developers and nonprofits and individuals working in this field would be able to leverage with this money. So my question is that while we're continuing to figure this out, we probably won't have something in place in time for the beginning of FY22. Are we looking at how we can continue to fund this throughout the next 1 to 2 fiscal years as we look at some more sustainable policy?
Mr. Chair, Councilor, I can take that and then I'll defer to the mayor. The short answer is yes, this is part of our financial plan for FY22. Mr. Mayor, would you like to add in?
Thank you. And thank you for the question. It really is the right question to ask, because a one-time investment isn't an investment. It's a spot expenditure. And so and it's also relevant to the presentation you just had from Dr. White and from Mary and Brad. What we're looking at is a sustained recovering. And as long as that continues, we're projecting enough revenue next year, as well as continued development, so that there will be continued fee in lieu of dollars to go into the Affordable Housing Trust Fund, as well as some other potential sources that have been identified for consideration by the governing body. So with those different streams coming forward, I think we are confident that we can maintain the $3 million floor, and it should be emphasized that's a floor, not a ceiling, for next year. At the same time that there is work to be done by committee and then by a working session of the body as a whole to evaluate ways to produce stable, steady, predictable, sustainable, equitable funding. One item that's been talked about a lot and that I think is beginning to take shape is taking a measure to the voters that would become a recurring source of funding through a bond issue. And I think there is growing support for that in the community. I think we heard it at the public hearing kicking off the budget process. So I believe that between that and the possibility of other revenue streams coming out from the legislature or from ordinances and developments that the governing body will be considering, as well as digging deep with subject matter expertise developed at each of the committee levels, we will have 2 years in a row where we can take the $3 million platform as something that people can depend on, and then have a predictable stream of revenue beyond that based on other sources, in addition to the possibility of general fund, but going to the taxpayers for a vote, going to diverting funds from other new sources of revenue, whether it's a cannabis legalization, regulation, and taxation source, or other things that we want to consider among ourselves. In other words, yes.
Wonderful. Thank you. Thank you, Mary. And thank you, Mr. Mayor, for that response. You know, I said this before when we had this conversation about short-term rental GRT, that I think this is really the right way to do this, to make sure that we are putting in the dollars that need to go there, to make sure that we are putting in this guarantee, and that we as a governing body really take the time to do the legwork, because this is such an important fund. This is such an important component for our city. We know that affordable housing is, I don't think that we have a single meeting where we do not discuss it at this point. And so I'm very happy to see this. I'm very relieved to hear that this is a commitment that we are making while we continue to figure out what that permanent streaming fund is going to be, and that 3 million is a floor, and that, you know, really other things are not going to, you know, we're not going to get to 3 million and then stop putting dollars in there, that we really recognize the need. And at the same time, that we also think about not just how are we funding this, but what are our strategies as a city for affordable housing. So I do see that the work plan is, you know, going to be introduced today. I'm very excited to hear more about it and read that. But that's something that I want to make sure that we keep our fingers on the pulse of, that it's not just, right, here's dollars, and then goes to how do we spend them? How do we plan? How do we make sure that we are not just plopping affordable housing in certain parts of the city, but that we are planning what our communities look like to make sure that they are inclusive and that there really is quality of life for every single resident in our community. So I'm excited to see this, and we still have so much more work to do, and I'm really excited to get going with it. So thank you, everyone.
Okay, anything else from the committee?
Mr. Chair, move to approve.
Okay, we have a motion. Is there a second?
Second.
Okay, Councilor Garcia, Councilwoman Vihel Coppler, and Mayor Weber, before I call for the vote, are there any comments or questions that you have? Councilor Garcia.
Thank you, Mr. Chair. And I'm just thankful that we're finally at this place where we are investing. And I think that's where I disagree with the mayor, whether it's a one-time investment or a long-term investment, it's an investment. And if we can't look at it from that perspective, because then we look at Santa Fe Suites as not an investment to the community. And ultimately, I think that is an investment. These resources are going to ultimately provide opportunities for future generations. Hopefully the impact is felt immediately, but by investing in this trust fund, we're committing to help future generations. My kids, my kids' kids, anybody else that wants to come and live here in Santa Fe, the folks that work here, we're investing in our community to say, you're a part of us, you're here. We invest in you. So I'm just thankful that we're finally at this place. I know that some of my colleagues had differing opinions in regards to how much we should invest. Should we invest the full 3 million? Because there was some concern about the capacity, and I'm sure that that was determining decisions. And I'm thankful some of my colleagues switched their decisions and understand that we can invest and build capacity at the same time. We can walk and chew gum. We can support our community and grow affordable housing at the same time. I guess my question is, given that this is a change in budget, usually there isn't a sponsor from the governing body. Usually it's just staff. So if you look at item B, for example, there's just staff. There's not necessarily governing body members. So if governing body members are having the opportunity to sponsor, I mean, I'd love to sponsor this because I'm fully committed to investing as much as we can in the Affordable Housing Trust Fund. So I guess that's a question for Mary. Is that an opportunity for every governing body member to sponsor this budget adjustment?
Mr. Chair, Councilor Garcia, I'd like to take that technical question to our legal counsel to see how she would advise us. I do believe that each of the members will be able to vote on this, therefore, either endorsing or not endorsing their support for this as we move forward. But I will take your question to our legal counsel.
Mr. Chair,
Yes, Councilwoman Romero Worth.
there might be some confusion. Nobody's sponsoring the budget, the item 8A, the budget adjustment request. It is just a budget request when it adjusts. I think we show our support by voting for it. And I only pulled it tonight to make some comments about it, but it's a recommendation from the staff and our management team that because our revenues are better than expected, this is one way we can use it, and to your point, have lasting effect for the future. So I'm not sponsoring it, and it is not a thing that we sponsor.
Okay, so Councilor Garcia, anything else?
Yes, and I guess I asked the question because I do see the mayor's name here as what would be as a sponsor. So that's why I asked the question, because it's here listed where usually just staff's name is, and I thought he was sponsoring it, and so I said, hey, I want to throw my support behind this as well, and do the sponsorship. So if governing body members don't have the authority to sponsor them, maybe a correction to future agendas should be made. With that, no other questions. I'm just glad that we're finally at this place where we are taking investing in our Affordable Housing Trust Fund seriously, and we're committed to really figuring out how we're going to commit long-term sustainable resources to this, because this is something that we need to ensure that lives generations. This is not a fund that is going to go for 10 years, 15 years, 20 years. This is something that has to live sustainably throughout the entire lifespan of the city, no matter whatever it is. With that, I'm just thankful for this and thankful that we were able to make this commitment to the trust fund happen. Thank you, Mr. Chair.
Okay, thank you. Councilwoman Vigil Koppler.
Thank you, Mr. Chair. I want to dovetail on Councilor Garcia's point and state that I find it unusual for this amount of money to have been written up as without a resolution. And I know that there's been several instances where Councilor Garcia has asked for a special session or work session to discuss as a group what all of us can work together on as a team to approach affordable housing. And I see this as, you know, a good, very good component of that. But it kind of struck me as being unusual because I've never seen this amount of money. And I've double checked. I've never seen this amount of money been written as a BAR sponsored by a member of the governing body rather than put forth as a measure from finance committee. And so I think that you might be able to see that there is much support for this by this council, at least members of this committee, and I doubt that would change, and I'm sure it would extend to those who are not present today. But it would seem like a very good opportunity to present a united front from the governing body and express and expose some leadership, whereby this was something that we all got to express our support. I agree, we have a vote that night, but it's a little different. There's a little nuance here. And in addition, because it's a BAR and without a resolution, we don't have an FIR to really discuss and analyze what is the city taking from, so to speak, or what other priorities, such as those expressed by Councilor Villarreal. What are we recognizing that we are willing to prioritize this over other things, which I think is very much a priority. So, you know, I see this as something that maybe we could have all worked together on as a team, and I'm hopeful that we can get somewhere with regard to Councilor Garcia's request, which I think he's made at 2 different council meetings, where we can work as a team and discuss this major issue rather than one member of the governing body coming forth without regard to others showing major support, which is what you do when you sponsor and co-sponsor. And so I'll save any questions I have because I note this is going to be heard at Public Works and then once again at the council meeting. But before I sign off, I would like to recognize also that today is Councilor Garcia's birthday. And he was very quiet about this. So I need to recognize for the whole world that he is turning 1 year older. And glad it's him and not me. Thank you.
All right. Happy birthday, Councilor Garcia.
Birthday.
Okay, so before I call for the question, Mayor.
I would share birthday greetings for Councilor Garcia. I did not realize that he and Mary McCoy are birthday twins today. So that's very special for the governing body to have that kind of representation tonight. Congratulations to both of you. That's super. I think this is a really significant step forward. I think we've been working for 3 years steadily on a housing agenda. It was first put forward by Mike Lofton and the group that he co-chaired as a transition team. It consisted of a really comprehensive set of activities that we needed to take on in order to have progress with housing. And as has been noted, we've made steady progress on everything from combating homelessness, taking on the issue of the impact of COVID on our homeless residents who needed a place to be safe and not be exposed to COVID. In fact, there was an article in a national publication in the last couple of weeks that cites Santa Fe as one of the few cities that has successfully prevented a COVID outbreak among a homeless population. That's a part of our housing agenda. It's a combination of social services and housing put together. The same applies to the purchase of Santa Fe Suites, which was probably the single most significant step toward providing affordable housing that the city's ever done in one increment. And now we take another giant step forward. As has been noted, it's a 3-to-1 leverage on the dollars that we're putting forward. So a $3 million affordable housing trust fund allocation is a $9 million affordable housing commitment. And it needs to be sustained over time. It cannot be a one-time deal. It's got to be something that we are combined to address as a city, recognizing that housing is fundamental. It is one of the fundamental basic components of health, but it's also one of the fundamental components of a community where people want to live and have their families live in the future. And I think it's phenomenal to have the support for this. I think it's great, a great sign of fiscal planning and fiscal oversight, that as we come out of COVID-19, which nobody could have predicted with any certainty, as we come out of a process where we had a White House previously that was unwilling to put any money to cities directly, and now we are fortunate enough to have a White House that is directly providing assistance to cities, that we're in a whole different circumstance. And because of that, we can take the step that we're able to take toward addressing the Affordable Housing Trust Fund. And there is a companion resolution that will be brought forward next, which speaks to many of these other questions about how do we build a strategy that is comprehensive? How do we make sure there is participation by all members of the governing body at a work session? How do we use the committee system so that people become subject matter experts and become in-depth in their knowledge of housing and the many elements that go into housing? And then how do we make sure there are wraparound services and social policies that support housing? And what is our larger vision for a sustainable, livable, and growth well-managed Santa Fe in the future? So I think it's a great giant step forward. It's a game changer, but it's not the end of the game. It is just one important moment in the whole game that we're working on for livable, sustainable Santa Fe. Thank you, Mr. Chairman.
Okay, Councilwoman Villarreal, you've had your hand up. I don't know if that's an old hand or.
No, it's a current hand. Just
Okay, go
a,
ahead.
thank you, Mr. Chair. Just a clarification on the bar. And so we understand it, because I feel like sometimes these bars are very hard to dissect. Can staff explain what the expenditure is? It says 1.8 is coming from subsidy payments. Maybe you could just break down how this is written.
Mr. Chair, Councilor, yes, let me pull it up. In short, on the revenue side, we have 1.8 million. 1.5 million is coming from additional GRT revenue that we outlined in the first presentation this evening. Additionally, we are allocating 300,000 from the Affordable Housing Trust Fund. So that brings it up to 1.8 million. The expenditures, that is the subsidy reference that you just made, is the account code that we use on our chart of accounts for these expenses. So it's essentially a grant, money going out the door from the city to some of the nonprofit organizations or some of the other recipients of the award. Those contracts will be coming to you for the 1.2 million that you referenced earlier that had already been allocated. Those will be coming forward to the governing body for approval now in the spring, now in April, and possibly May for allocation as well.
So the 300,000 balance, it's like, I get, it makes it look like it's the leftover, like a decrease. I don't understand that. Maybe you can explain that to me, the 300,000.
The expenditure is the 1.8 million total. That's the top line. And then the transfer from the Affordable Housing Trust Fund, we have to account for that transfer as well, as I mentioned earlier, from the general fund into the Affordable Housing Trust Fund. And on the expense side, or on the revenue side as well, the transfer to the Affordable Housing Trust Fund from the general fund, you see that both as an expense and as a revenue, the offset. And then the general fund GRT, that is showing the amount of increase for the GRT that we are anticipating be allocated to this amount. And again, that was outlined in the presentation earlier. And then that 300,000 is the amount, as you can tell from the box on the very bottom, for Fund 240. That's the fund that contains the Affordable Housing Trust Fund. So that's the balance of the 300,000 that we are pulling out of the fund to appropriate via this budget adjustment resolution to the expense side to match that 1.8 million above.
Thank you for that clarity. That's all, Mr. Chair.
Okay, Councilwoman Lindell.
Just really quickly, in talking about sizable bars during a fiscal year, which I know that Councilor Vigil Koppler was asking about. I seem to remember that we did that, a very sizable one in a mid-year for the Midtown, but I'm not sure. Mary, can you shed any light on that we have done this before?
Mr. Chair, Councilor Lindell, yes, you are correct. Your memory serves you well. I believe it was 2 years ago. We did a mid-year budget. So around, I believe it was February or March, we did allocate additional expenditures for, you are correct, Midtown was one of the larger ones. At that time, that was the first year that the city had assumed responsibility for the Midtown assets. And there, if you recall, that winter, there was a few pipes that froze and burst, and we had to allocate additional expenses to Midtown. So that was one of the larger ones. We did bring forward a few other items that were sizable via a budget adjustment resolution as part of that mid-year budget review. You are correct, Councilor.
Anything else, Councilor Lindell? Okay, can I have a roll call, please?
Counselor Cassett Sanchez,
Yes.
Counselor Villarreal,
Yes.
Counselor Lindell,
Yes.
Counselor Romero Worth,
Yes.
and Counselor Baton.
Yes. Okay, thank you. That item passes. Then we move on to item B, which is a request for approval of a budget adjustment in the amount of $290,000 from general fund reserves to park service contracts. Councilwoman Villarreal.
Thank you, Mr. Chair. Just quick question for staff. This is a separate amount of funding that we have to support parks, maintenance, et cetera, and medians. And this is separate from the funding that we have discussed with members of the governing body about the capital improvements funding. So are those two different options that we have? We have money that can go towards, I think it's GRT for capital improvements. And then this funding was general fund. Is that correct?
Mr. Chair, Councilor Villarreal, you are correct. There are two different allocations. The allocation that Regina and her team have discussed briefly is a need for an interim package, a capital improvement package for the city to address deferred maintenance and some priorities around town and various, in all the council districts. That being said, these are operating costs. So these are being allocated in a current fiscal year for use before June 30th. Again, we talked in our presentation earlier about that June 30th, July 1st timeline being an accounting timeline, really artificial for our spring and summer services that we have throughout the city. So this was a great example of the work that we've been doing over the prior weeks to work with Melissa and Regina to put together this package for what would be the best use of these additional revenue in the spring season. With that, I'll turn it over to Regina and Melissa to walk us through what these operating expenses are.
Okay, who wants to address the committee? Ms. McDonald?
Yes, Chairman Abeyta, councilors. As Mary described, these are operational funds that we need to keep up in terms of deferred maintenance. This is based on plans that we had in place. Some of this work was put on hold because of reduced funding due to COVID. And so since we have some additional funds that are showing up, we are really happy to be part of the good news of this recovery so that we can utilize these funds to service our constituents. So all of these items are immediate things that we're in need of, that our constituents demand of our city. And I think that we can do a great job with these funds.
Councilwoman Villarreal.
Sorry, I was waiting to see if Regina was going to present, but thank you, Melissa. And I know we talked about the weed prevention plan. The bulk of this is for weed prevention to support weed removal within medians, rights of way, parkland, and replacement of gravel, bark, weed barriers, et cetera, which is great. And I'm just wondering, this amount, does this give, do you all have like an actual number of how many medians and rights of way this would cover? This amount?
Chairman Abeyta, councilors, one can never know how fast weeds will grow. So that's a difficult question to ask, although there has been some accounting of the medians, and this will do a significant amount of medians in the fact that I would say that we can make a pretty huge dent in our major arterials, some of the Srios Road, Airport, Rodeo Road, the areas that are most populated by weeds and people are concerned about. Exact number is a little hard to come by, but I would say that it would be substantial.
Great, that's good to know.
We have 578 medians that we maintain. And I would say that, this would be, if I had to put a percentage of it, I'd say this would take us pretty far, like maybe 50% would be affected easily.
Great, that's great to know. And then the combination of the other amount that we had, the GRT for capital improvements, there was a piece of that also was supposed to go towards medians. So I'm hoping that this amount and that amount combined can cover us wholly across the city. Is that what you're anticipating?
Chairman Abeyta and councilors, this will get us pretty far in that. You may recall that when we did a legislative request, it was at 1.5 million. So it's not entirely there. But I think that this would be substantial. I think we're going to see huge improvements. And I'm very excited about the potential that we might get additional funds to actually do long-standing changes beyond just removing weeds.
Thank you, Director McDonald. That's all I have, Mr. Chair.
Okay, thank you. Anything else from the committee? Anything from members of the governing body who joined us?
Move to approve.
Okay,
Second.
we have a motion. Second, can I have a roll call, please?
Counselor Cassett Sanchez,
Yes.
Counselor Villarreal,
Yes.
Counselor Lindell,
Yes.
Counselor Romero Worth,
Yes.
Counselor Abeyta.
Yes. Okay, so that item has been approved. That moves us to item D, which is a request for approval of sole source purchase of EOD robot from Northrop Grumman Remote Tech Inc. for $305,001 of funds, 100% reimbursable from the 2019 State Homeland Security Grant Program, New Mexico Department of Homeland Security and Emergency Management. Councilwoman Villarreal.
Thank you, Mr. Chair. I asked the majority of my questions in the Quality of Life Committee, and it was helpful. The follow-up that Chief Padilla provided for us with the EOD calls for service for the robot that's no longer functional. So that was helpful. From 2004, he listed there was a gap of a time frame that you didn't have data, but I think overall it was helpful to know what the utilization of the robot, as well as the maintenance and repair costs. And the only follow-up question I had was about the second. So there's two robots. One that's, from my understanding, there's two robots, one that is not functional at all, and the other one that's still functional, and then we're adding a new robot. So I'm not sure who's on to answer any questions. I just wanted to ask a follow-up question about the functionality of the second robot, not the new one that you're requesting, but the one that's still functional.
Mr. Chair, Councilor Vidiel, I can address that question.
Great.
Thank you. Yes, ma'am.
Go ahead.
So the robot that's currently operational is a support robot. So it can do scout work, it can move light items, but the robot we're looking to purchase, which replaces the robot that's not operational, is an F6 robot. So by the FBI standards, in order to maintain a team, it can do certain functionalities, such as the deployment of a pan disruptor. So if there is a device that's in either a container or a vessel, that pan disruptor, which is like a high pressure water stream that strikes that thing, can disrupt that device to either stop the item from being a threat or to move parts of that vessel so they can do further inspection, and that'd be after they do an x-ray. So that's one of the features of that F6. Another thing too is its ability to carry a payload. So the current robot that is operational does not have the payload capacity as an F6. And the F6 is the standard model that all EOD teams need to maintain in order to be operational.
Got it. That's helpful. And so that other robot we have that's kind of the backup, that's functional enough and certified that we have that as a usable option along with the new one. Is that correct?
Mr. Chair, Councilor Bedia, that's correct. So the F6 robot would be the primary robot to go and do the work. If they need to deploy that scout robot, either in a hasty deployment or to support the secondary robot with providing a different vantage point, because the way the technicians work is remotely. Everything is remote, so they may need a different angle to be able to utilize the robot to be precise in what they're doing.
Got it. And then this can be used at any of our city facilities. Is that correct? Like if the airport had a suspicious package, we would deploy this particular robot to the airport as well?
Yes, ma'am. If there's any call for service that involves a suspicious package that would require the deployment of the EOD unit, the robot can be utilized in those environments.
And do we share our robots cross-jurisdictionally?
Councilor, we don't share the robots with other jurisdictions, but we do assist with mutual aid requests from other jurisdictions. So, from time to time, we may get a call, let's say up in Ruba County at the courthouse. That's the last one that comes to mind for me. They contacted us for assistance. We checked with state police. They were able to handle that one. But we also had one from the Santa Fe Sheriff's Office up in Pewaukee, where we had to send our resources up there. And the complement comes with the technicians and the equipment to go and mitigate the risk.
Thank you. And I think it was also helpful to get information from Michael Anthony, who's a special agent bomb technician that also sent us additional information. And I guess the only request I have is moving forward, it's very important to track your data, and it was helpful to have the data you gave us. And so moving forward, having us know how it's utilized, how many times, in what situations, or if there's other call outs from other jurisdictions and how we supported, as well as the maintenance costs as we move forward. It just shows our due diligence. And so I request that we do that as we move forward for this next, for the new robot. That's all I have, Mr. Chair. Thank you,
Okay.
Deputy Chief Valdez.
Thank you, ma'am.
Okay, is there a motion?
Move to approve.
Second,
Okay, we have a motion and a second. Can I have a roll call, please?
Counselor Cassett Sanchez,
Yes.
Counselor Villarreal,
Yes.
Counselor Lindell,
yes,
Counselor Romero Worth,
Yes.
and Counselor Beta.
Yes. Okay, so that item passes. That brings us to item F, which is a request for approval of streetlight conversion contract with Public Service Company of New Mexico to convert PNM owned streetlights in city limits to LEDs for up to $421,185, including NMGRT. Councilwoman Villarreal.
Thank you, Mr. Chair. Just a quick question for staff. I guess I was under the impression that when we start converting the poles that are owned by P&M, that we would in turn then acquire those poles into the future so that we don't have to have a payout situation where anything that's fixed on their poles, we still pay to the third party. So can you explain that to me a little bit more?
Yes, Chairman, Councilor Villarreal, thank you for that question. Streetlights are so much more complex than we might have ever guessed. Actually, and Jamie Aranda is here from P&M, and she'll help me answer because she has become quite the expert on streetlights too over the past few months. So actually, by switching to LEDs, it is just an incredible win for the city. We shift to a different rate structure, both on our city-owned lights as well as on P&M owned lights. And when we shift to that new rate structure, we no longer pay P&M for maintenance, not on our lights and not really on their lights. There's a small fee, it seems to me, for, they're providing the lighting, but it's much, much smaller right now. For example, we pay 14 cents a kilowatt hour for our lights, and that includes the maintenance, and we're going to go down to like 5 cents a kilowatt hour. So, but they do still own their lights, but they will be responsible for the maintenance. And maybe Jamie can help me clarify if there's any expenses that the city is still responsible for on maintenance of the P&M lights, but I think the answer is little to none, but I'll let Jamie answer that.
Director Wheeler and Chairman and Councilor Villarreal for the question. So most of the P&M lights are also on distribution systems. So that's also why there's not really a transfer that's possible because of that distribution system on there. But Director Wheeler is correct. The rate will lower, and there will be no more maintenance cost to the city of Santa Fe. I think we're going to be seeing a maintenance agreement down the line that will have a lot more of that information in there.
Good to know. I mean, we like to work with you, Ms. Aranda. I was just wanting to see how P&M would then be out of the picture so that we're very autonomous in the maintenance plan moving forward. But I understand there's still going to be a partnership with you all because of the infrastructure you own, and that won't necessarily transfer over to us.
Chairman and Councilor Villarreal, that's correct. And we are working with constituent services and Dalkia to come up with a very streamlined process on how we work that communication from constituent services to P&M's customer service as well as Dalkia. So I'm happy to share that with you, that process that we've come up with to address those maintenance issues in the future.
That's great. Yeah, eventually, yeah, I think it'd be great for us to know the process so that we don't get our wires crossed and then there's a smooth transition to get things taken care of in terms of maintenance. That's all I have. Thank you. I move to approve.
Okay, we have a motion. Is there a second?
Second.
Okay, can I have a roll call, please?
Councilor Cassett Sanchez,
Yes.
Councilor Villarreal,
Yes.
Councilor Lindell,
Yes.
Councilor Romero Worth,
Yes.
and Councilor Beta.
Yes.
Thank
Okay, so that brings us to item P, which is a request for the approval of contract amendment number 1 for professional service contracts to change the scope of work for Youth Works. Councilwoman Lindell.
Thank you, Chair. Hi, Julie. Could you just give us a quick little rundown on this and let us get a little better picture of the baby? Nice. Thank you.
Good evening, Chair, Councilwoman Lindell. So there were a couple of things that happened around the time that we were initiating some of our youth and family referrals. The biggest one, of course, was the CARES Act funding, in addition to kind of our very late CYFD and CYC funded contract. So in the midst of all of that, I was training new staff. I had a brand new contract administrator and I also had a new project administrator. And so during that training, unfortunately, the CYFD funds that we received did not match our own internal contract. And so having them correct it and then having to re-bring it through the process. Unfortunately, with CARES Act having my main attention, I wasn't able to catch the issue before it was signed off and approved.
I just wanted a brief explanation like that. I appreciate it very much. I'll move to approve.
Okay, we have a motion. Is there a second?
Second.
Okay, any further discussion? Can I have a roll call, please?
Counselor Cassett Sanchez,
Yes.
Counselor Villarreal,
Yes.
Counselor Lindell,
Yes.
Counselor Romero Worth,
Yes.
Counselor Beta.
Yes. Okay, so that concludes, that item passes, and that concludes the items that were removed from the consent calendar. Item number 8 are matters from staff. Ms. McCoy.
Mr. Chair, councilors, we did postpone the bond update to April 5th. I know we had promised at our first meeting in March to have the part 2 of our bond series, but due to the timing, the good news, our cautiously optimistic news around our updated revenue forecast and the urgency to bring forward our budget adjustments, during this meeting, we went ahead and postponed that. So we'll look forward to that bond update part 2 in the month of April. So that is our only update at this point. Thank you.
Okay, thank you. Matters from the committee. Councilwoman Romero Worth.
Thank you, Mr. Chair. As I alluded to, I have 2 things I wanted to introduce tonight. One is a resolution on behalf of the mayor establishing a work plan for improving access to affordable housing opportunities for residents of the city of Santa Fe. I'm co-sponsoring that also with you, Mr. Chair, and Councilor Garcia. And as we talked about a little bit earlier, it does lay out a work plan for how we go about evaluating the ideas that have been circulating about how we fund the Affordable Housing Trust Fund in a sustainable way that's predictable, and that we get, to that $3 million floor every year so that we can plan for it. I'm also sponsoring, or actually I'm introducing on behalf of Councilor Rivera, a resolution that I will be co-sponsoring with him. It's kind of a lengthy title, an ordinance regarding the Independent Salary Commission, amending section 16-19.1 SFCC 1987 to make clarifications, amending section 6-19.2 SFCC 1987 to change the effective date of the salary to align with the term for mayor set forth in the Santa Fe Election Code, section 9-1 SFCC 1987, amending section 16-19.3 SFCC 1987 to establish an application process and modify length of the commissioner's terms, and amending section 6-19.4 SFCC 1987 to set the future schedule for the Independent Salary Commission. And again, this represents, I believe, a starting point for discussion about how to address the issues that have arisen with this commission. We are in a little bit of a time crunch for aligning this process with our new election, but we have more time for, if we need it, if we find that we need it, to find the right way to get this commission established. But right now, this process is misaligned because we moved our elections from March to November, and it's created some issues. So we're trying to alleviate that. But we'll be talking more about this as it moves through the process, and just wanted to get it kicked off tonight. And then finally, one other thing I just want to bring forth. We've been getting emails and we've been talking about renewing our well, actually, this is the problem. So we've been talking about amendments to the Joint Powers Agreement for the Regional Coalition of Lanel Communities. And I think we all got an email this afternoon from the city attorney that I think helps clarify what that's about. Because we as counselors have been getting emails suggesting that if we vote against the amendments to that JPA, we will be removing the city of Santa Fe from the coalition. And in fact, that's not what that's about. What we are doing is approving or disapproving some amendments to that Joint Powers Agreement. If we vote against those amendments, it just means that those changes won't be made. And the thing I don't know is if we vote against it and everybody else votes for it, if they still pass, it just shows that we voted in the negative. So I'm not sure how that works, but I think the really crucial thing is that people understand that by voting against those amendments, we are not removing the city of Santa Fe from that Joint Powers Agreement and from membership in the coalition. If that's something that this community wants to see done, there has to be a separate piece of legislation to do that. And I just want to start to make that public because I think there's been some confusion. So thank you, Mr. Chair, for indulging me on these things. I appreciate it.
Thank you. Any other matters from the committee? Nope. Okay, then I don't have anything from the chair other than to tell Mary, sorry you had to spend your birthday with us, but it was great of you to do that. And I hope you enjoy the rest of your evening. Happy birthday.
Thank you, Mr. Chair.
Okay.
Happy birthday, Mary.
Happy birthday,
Happy birthday, Mary.
Guys.
Okay, so our
We'd
next
sing, but I bet we'd be out of tune.
yeah, I'm sure. Okay, so our next meeting is Monday, April 5th, 2021. With that, we are adjourned.